Welcome to today's webcast, Insurance in the Artificial Intelligence Era. Before we begin, I'd like to cover a few housekeeping items. To receive a copy of today's presentation, please send a request to reply@riskreg.com. To ask a question during the meeting, type your inquiry into the Q&A panel to the right of your screen. We will respond to all questions after the session unless time permits at the end of the session. To answer polling questions, click on the radio button to the left of your desired response, then click Submit to record your response. For technical assistance, click the Help widget at the bottom of your screen. Today's presentation will be recorded. CRE eligibility. Log into the webcast with your first and last name and email address. Remain on the webcast for a minimum of 50 minutes. Participate in polling questions. 80% response required. To answer a polling question, click on the radio button to the left of your desired response, then click Submit to record your answer. You do not need to have the correct answer, but you must participate to receive credit. Complete the course participation survey. For attendees participating in a group, designate one proctor to log in as an individual on behalf of the group, then complete and submit the group sign-in form within 24 hours of the event's conclusion. The form can be downloaded from the resource list on the right of your screen. Complete and submit the course participation survey. The form can be accessed from the resource list to the right of your screen. One CRE credit will be issued to eligible participants within 30 days. RRC will not issue credit if all criteria are not met without exception. It is now my pleasure to turn the call over to Jennifer Kelly. Jennifer, the floor is yours.
Hi, thank you all for attending. Our first presenter is Ernest Nickerson. Ernest is a Market Regulation Senior Manager at RRC who performs market regulation consulting projects related to examinations, investigations, analysis, and operational reviews on behalf of state insurance departments. He contributes to insurance regulatory thought leadership initiatives and has provided numerous presentations and webinars in recent years for IRIS CDS and various state insurance departments. Our second presenter is Ben Miser. Ben is an actuarial senior manager at RRC with over 30 years of experience in a wide range of life and annuity products with a broad understanding of insurance company operations and associated risks from a product, investment, and reserving perspective. He contributes to insurance regulatory thought leadership initiatives by actively participating in industry groups, including the American Academy of Actuaries, Life Practice Council's Macroprudential Task Force. And our third presenter is Tom Hayden. Tom is an IT manager at RRC who brings over 30 years of information technology, general controls, audit experience, combining a background in external audit, internal audit, and IT risk management. Tom contributes to insurance regulatory thought leadership initiatives by actively following activities of several NAIC working groups, such as the IT Examination Working Group. We are now going to go to our first polling question. So polling question number 1, which of the following most closely describes your current role? A, financial examiner, B, data analyst specialist, C, market regulation examiner, D, actuary, or E, other. So make sure that you hit that submit button on the bottom right-hand corner of your screen. And it looks like the majority of you have done so already. And that's great. We have a wide variety of participants today. I'm glad you can all join us. I'm now going to turn the presentation over to Ernest. Ernest?
Thank you, Jennifer. And thank you for joining us this afternoon. We have a very exciting presentation today involving artificial intelligence and its use in the insurance arena. Artificial intelligence is being used more in our everyday lives from Amazon, Netflix, Google, and different other platforms. So it is apparent that it would make its way into the insurance sector. So what is artificial intelligence? To make it simple, artificial intelligence is basically computers mimicking human intelligence. Just think of Alexa or Siri on the Apple iPhone. Also, as another example, imagine you arrive at work every day and you go down the hall to get your coffee. However, you arrive one day and is introduced to Henry. Henry asks you, how would you like your coffee, as well as all your coworkers. And then Henry proceeds to prepare and deliver your coffee as you like on a daily basis. Machine learning is a subset of artificial intelligence, which involves the use of algorithms that learns data without relying on programming. So what are algorithms? Algorithms are a method used to process data to extract patterns for application in a new situation. The goal here is to adopt a system to a specific input or output. For example, Amazon uses algorithms which decides how products are ranked in search results. Google also uses similar algorithms for search results, which uses keywords to decide relevant search results. Deep learning is a subset of machine learning, which consists of algorithms that permit software to perform tasks. Using the Amazon model again, deep learning helps Amazon analyze which products consumers are likely to buy, further recommending the same type of product to them while they are on the site. The aim here is to create neural networks, which are computer simulations of the vast networks of neurons that pass signals back and forth across the brain. So as you can see here, there are a number of areas impacted by artificial intelligence. I'm going to go into detail a little more about how AI is used in sales and marketing, claims, and health insurance. Ben will go into depth about the use of underwriting during his presentation, and Tom has a superb case study that will touch on how AI is used in the homeowners market in more detail. Several ways AI is being used in the sales and marketing area include intelligent customer engagement. This allows insurers to strategically deflect issues that need to be addressed from human agents to machine chatbots. Chatbots can predict why customers are calling and approach them proactively. So what is a chatbot? A chatbot is a computer program designed to simulate conversation with humans. And again, Tom's case study will display the use of chatbots. AI can provide lead allocation for agents. Data analytics and the virtual advisor gives insurers invaluable knowledge about their customers, making it easier to convince them to buy a comparable high-end product or a product that is related to the ones that they already have. Automated product recommendations. A virtual advisor responds to customers by extracting information from a back-end database. The virtual advisor consumes human-agent interactions and stores knowledge in its database, enabling it to make automated product recommendations based on customer profiles. If a complex issue arises, the virtual advisor transfers the request to a human agent. Increased service quality. Virtual advisors interact with customers and absorb information about their needs. This valuable feedback drives personalization of products and improves the quality of services. So if you take a look at the chart below, it depicts minimal use of digital assistants today, which is around 5%, and more reliance on call centers. However, the future model predicts more reliance on digital assistants and less reliance on call centers. And as you can see, the human chat percentage increased, but that's due to the fact that the digital assistants may not be able to answer some of the complex issues that are presented And so those issues would have to be transferred to a human for resolution. Now let's take a look at how AI can impact the claims process. AI can assist with faster settlements. Virtual claims adjusters can work efficiently around the clock to process claims. Imagine a significant weather event, such as a hurricane, where a significant number of claims are expected to be filed and expected to be processed quickly as well. Improved fraud detection. Intelligent systems can identify irregularities or patterns in claims data and notify the insurer immediately. Behavioral premium pricing. AI has the capability to provide personalized data to pricing platforms, allowing safer drivers to pay less for auto insurance and people with healthier lifestyles to pay less for health insurance using sensors. So usage-based insurance is an example of behavioral premium pricing. And if you take a look at the depiction below, this is also another example. So the conversation here is between an adjuster and the insured, with the adjuster notifying the insured that a sensor had detected a water leak in the kitchen. The insured informs the adjuster that she is going to contact her neighbor since she's not at home to go and take a look at it. So lo and behold, the neighbor does identify the leak and turns the water off. And so this helps prevent additional damage and also allows the adjuster to proceed with resolution of this issue. And he further asked the insured if she wants him to contact a plumber to resolve the issue. AI is also being used in the health insurance area. Some of the uses include identification of at-risk individuals by allowing insurers to use a lab registry of 18 billion clinical records to stratify risk for a group of beneficiaries who have just enrolled. Information from the prior 2 years can be obtained, which let insurers know which members need disease management. AI also allows for streamlining of medical record review, prior authorization, prepayment review, and post-payment auditing, which are items that can be time-consuming to review and are typically handled by humans. So the chart here shows the results of a 2019 white paper containing responses from 300 insurance carriers across the top 100 U.S. carriers for auto, homeowners, life, and commercial markets. As you can see, faster claim settlement is the top benefit insurers believe AI will provide. Results also show that improved fraud detection and improved pricing decisions rank high as well. So just as there are benefits to using AI, there are also an equal number of challenges involving the use of AI as well. Some of these challenges include where to start the process. Implementing AI is a huge undertaking. The company needs to decide what area of the company should the implementation process begin with. Will it be customer service? Will it be claims or underwriting or some other area? And how should the determination be made as to which area to begin the process with? Financial challenges. The cost of implementation is hefty. There's also an uncertain return on equity as well. Change management. The reality is, most Most individuals and companies are reluctant to change if their current process is working. The question they typically ask is, will the new process work as anticipated? If you decide to move forward with the implementation, finding individuals with the level of expertise to carry out the process will be difficult and expensive if you are able to find someone with that technical knowledge. And there are regulatory concerns with AI as well. How will the use of artificial intelligence be perceived? Will the regulators understand it? And then there are a host of regulatory issues that may need to be worked out because current law does not consider artificial intelligence. Handling of large volumes of data. The entity would need the ability to manage large volumes of data and ensure data security. And then you have unfair discrimination or bias that could possibly be involved as well. And this can result from pre-existing cultural, social, or institutional expectations because of technical limitations or by being used in unanticipated context or by audiences who were not in the software's initial design. And this can be planned or unplanned. The chart here identifies top challenges identified with the use of AI. And as you can see, financial is the #1 challenge that has been identified. And these results are, again, from a 2019 white paper containing responses from 300 insurance carriers across the top 100 U.S. carriers for auto, homeowners, life, and the commercial markets. It is now time for our second polling question. What are some of the benefits of AI in the insurance sector? A, ease of regulatory approval and compliance. B, staffing, bias, and data handling. C, improved claim settlement and fraud detection. Or D, all of the above. Please click Submit once you have selected an answer. All right, so it looks like the majority of you have answered. And the correct answer here is C, improved claim settlement and fraud detection. I will now turn the presentation over to Ben. Ben, it's all yours.
Thanks, Ernest. And thank you again to everyone for joining us today. I'm now going to take us through a little bit of a deeper dive into artificial intelligence and underwriting in the insurance industry. A recent study by Accenture found that 63% of insurance executives say that the industry will be completely transformed by intelligent technologies, and that 53% are already using them in one or more business processes. Accenture estimates that investments in intelligent solutions could increase annual profitability for U.S. insurers by $20 billion. Artificial intelligence is likely to affect the entire landscape of insurance as we know it. Change is here and more is coming. Today, the insurance market is dominated by massive national brands and legacy product lines that haven't substantially evolved in decades. This kind of stagnation has historically suggested that it's an industry ripe to be disrupted. There's a clear evolution of the underwriting process from the past, where underwriting analyzed static facts, to the present, where underwriting includes a more dynamic picture and of course to the future, which can completely change the way we look at underwriting. With more information available from both traditional and non-traditional sources, motor vehicle records, prescription histories, credit data, underwriters can now access lengthy histories and view a more dynamic, complete picture of applicants. Equipping underwriters with tools to access and analyze this additional information is enabling the development of accelerated solutions in which applicants can be underwritten dynamically based on their behaviors over time via a more frictionless and consumer-friendly process. Moving forward, big data, insurance analytics, and the availability of non-traditional data are leading underwriters into the augmented reality era. Streams of information continuously collected and subsequently feeding algorithms and machine learning tools that convert that data into immediate, actionable insights. And the result will be a multidimensional, interactive, and predictive view of risk that will change the way we look at underwriting. AI will fundamentally transform insurance underwriting. Insurers will be able to better predict losses, provide advice, and help customers prevent risks. AI has the potential to take underwriting from what many refer to as a detect and repair mindset to a predict and prevent philosophy, where there are fewer educated guesses, more accurate information, and making sense of data and using it as a competitive advantage. This is just one example of what is possible. Using a selfie to provide the insurer with things such as BMI calculations and smoking indication through technology. LSI scientists use machine learning techniques to build sensory analytics algorithms that provide real-time results. They are currently researching the enhanced information that sight, voice, and skin-based analytics can provide, and will continue to develop new algorithms and corresponding tools based on their findings. Scientifically formulated questions that change according to responses provide more insight and accuracy into individual longevity than standardized questionnaires. By combining life sciences, dynamic questioning, and sensory analytics, it's now possible, for example, to identify smokers who are likely to live longer, as well as detect when someone who has not been truthful about their past and present smoking habits on an application form. So why is this happening now? Technology has been around and improving for a very long time. We know that insurers have to evaluate a multitude of highly complex and often new and unfamiliar risks in the process of underwriting. There are multiple sources of useful data that can provide insights into a variety of risks, and managing such large amounts of data is challenging and often impossible for underwriters. So basically, it's this explosion of data. Human beings just don't have the ability to deal with the massive amounts of data we're getting now. And that can be the competitive advantage of AI, being able to use this data to make better decisions. And that brings us to our third polling question. Which of the following are causes of this explosion of data? A, low-cost cloud storage. B, open source technology. C, digital sensors on machines and people. D, digitization of business processes. Or E, all of the above. Please click on whichever answer you believe best describes these causes. Be sure to click on the Submit button in the lower right corner of your screen. And once I see that most of you have responded, we will move on to the results. It looks like most of you have responded at this point. And as most of you have indicated, the answer is all of the above. Low-cost storage, open source technology, digital sensors, and the overall digitization of all business processes are all causing this data explosion. So what has become the solution to this issue? It's machine learning. Applications learn from training sets of past experiences to highlight key considerations for human decision makers and to minimize errors. Machine learning incorporates real-time, highly granular data, and it helps underwriters simplify the complexity of their work and improve their decision making. Imagine life insurance underwriters automatically incorporating information about prescription drug history, gym club memberships, shopping habits, and travel plans. Of course, the independent learning nature of machine learning raises concerns for state insurance regulators. With machines capable of learning how to improve independently and without any or only limited human involvement, it's important to ensure the deployment of machine learning continues to adhere to regulations regarding areas such as data privacy, fairness, discrimination, and cybersecurity. Machine learning algorithms are based on proprietary data and models particularly difficult to interpret or explain. The resulting black box poses challenges to state insurance regulators trying to understand what data is used from what sources and how the machines actually reach their conclusions. This lack of interpretability and audibility could potentially embed unknown and unforeseen risks if this technology is not appropriately managed and supervised. It could become a macro-level risk for the insurance market. Adequate testing and training of machine learning tools, auditable by regulators, is essential to ensure that they operate within their design parameters and in full compliance with existing regulations. The ability of machine learning to analyze data at a very granular level for more accurate pricing and risk assessment could have consumer protection implications as well. To avoid discrimination, data on sensitive characteristics such as race, religion, and gender are not supposed to be considered by insurers. However, machine learning algorithms may use geographical data or other individual attributes, creating outcomes which implicitly correlate with those sensitive characteristics. This could result in the same biases and exclusions of groups of consumers that regulators were trying to avoid in the first place. Collecting data from diverse sources to arrive at automated conclusions and decisions about people raises a host of questions about privacy and data quality. Insurers should be able to show what inputs go into their models and explain the logic behind their decisions. At the same time, with machine learning, this kind of transparency into the data and the decision-making process tends to be more difficult than traditional rules-based models. New regulatory approaches may be required to effectively alleviate concerns about machine learning models. One of the most common fears about AI is that it will steal jobs and make humans obsolete. However, in reality, many of AI's most valuable and compelling use cases revolve around people and machines working together to perform challenging tasks and jointly evolve their capabilities. In many situations, AI isn't taking over people's jobs. It's helping people be more effective and making their jobs more satisfying and enjoyable by boosting their performance and reducing tedium. Also, it can free people up to spend more time and energy on activities that are more valuable and strategic to the business. Despite experts' confidence in AI, they don't expect human underwriters to simply go away. We'll still need human beings to apply judgment for complex cases. Very structured lines like automobile underwriting can certainly rely more heavily on rules engines to make decisions, but other lines will still need more human interaction. The entire industry needs to become more educated about artificial intelligence so they can be a part of defining the future rather than leaving it in the hands of technology vendors or simply losing out to more progressive competitors. One thing is clear, underwriters of the future will need and already need data science skills, and executives will need an open mind. Insurers have already created chief analytics officer positions, are buying more and more external data, and are building proprietary models. And they're not doing it alone, but are working with tech startups that specialize in AI. This space is changing so quickly that any carrier trying to do it themselves is probably not going to be fully successful. Carriers are going to need to form an ecosystem of capabilities, some internal and some external. As we have seen, data is fast becoming one of the most valuable assets for any organization. The insurance industry is no different. How carriers identify, quantify, place, and manage risk is all predicated on the volume and quality of data they acquire. Most AI technologies will perform best when they have a high volume of data from a variety of sources. So carriers must develop a well-structured and actionable strategy with regards to both internal and external data. Internal data will need to be organized in ways that enable and support the agile development of new analytics, insights, and capabilities. With external data, carriers must focus on securing access to data that enriches and complements their internal data sets. The real challenge will be gaining access in a cost-efficient way. Overall, data strategy will need to include a variety of ways to obtain and secure access to external data, as well as ways to combine this data with internal sources. This could include the direct acquisition of data, licensing of data sources, use of data APIs, and partnerships with data brokers. The insurance organization of the future will require talent with the right mindsets and skills. The next generation of successful frontline insurance workers will be increasingly high demand and must possess a unique mix of being technologically adept, creative, and willing to work at something that will not be a static process, but rather a mix of semi-automated and machine-supported tasks that continually evolve. Developing an aggressive strategy to attract, cultivate, and retain a variety of workers with critical skill sets will be essential to keep pace. These roles already include data engineers, data scientists, technologists, cloud computing specialists, and experienced designers. The IT architecture of the future will also be radically different from today's. Carriers need to make targeted investments to enable the migration to a more future-forward technology stack. Although the shifts in the industry are tech-focused, addressing them is not necessarily always the domain of the IT team. Instead, areas across companies should invest the time and resources to build a deep understanding of these AI-related technologies. Part of this effort will require understanding where and when disruption might occur and what it means for certain business lines. We all know that rapid advances in technologies in the near term have already led to and will lead to even more disruptive changes in the insurance industry. The winners in AI-based insurance will be carriers that use new technologies to create innovative products, harness learning insights from new data sources, streamline processes and lower costs, and exceed customer expectations for individualization and dynamic adaptation. Most important, carriers that adopt a mindset focused on creating opportunities from disruptive technologies, instead of viewing them as a threat to their current business, will thrive in the insurance industry of the future. And now I'm going to turn it over to Tom to take us through a case study.
Thank you, Ben. I want to start by thanking Ernest and Ben for providing the background information on artificial intelligence. But before going over the case study, I want to review a couple of terms with you. They are INSURTECH and a little expanded definition of chatbot from what Ernest gave. I also want to cover 3 different types of chatbots, and then I will walk through the case study, which will focus on completing an insurance application and submitting a claim using a chatbot. So let's start with the definition of INSURTECH. INSURTECH is a relatively new term and is similar to fintech or financial tech. INSURTECH is more than automating manual tasks like traditional claim payment process. It involves leveraging technology, including artificial intelligence, advanced data analytics, and machine learning to enhance the customer experience and to allow insurance companies to be more competitive. So now that we have the basic definition of INSURTECH, let's go over the definition of chatbot. So in its simplest form, according to the Oxford English Dictionary, a chatbot is a computer program designed to stimulate conversation with human users, especially over the internet. One way to think about a chatbot is to imagine that you are having a text messaging conversation with a friend. Your text message is sent and displayed in a text bubble, and when your friend replies, his or her text is displayed in a little text bubble as well, and so forth throughout the conversations. Chatbots may also be called an AI bot, an AI chatbot, etc. There's a lot of names. They're basically the same thing. They're all chatbots. So there's 3 types of chatbots: basic, advanced, and advanced AI. A basic chatbot involves filling in the blanks to questions, like your name and address, and there's not a lot of background processing going on. An advanced chatbot, on the other hand, does simple transaction processing in the background. An example would be on your phone to place a takeout order at a restaurant. And in the background, the app looks at the restaurant queue and lets you know that your order will be ready in 20 minutes. This is something most of us have done and experienced as a result of the COVID-19 pandemic. An advanced AI chatbot leverages artificial intelligence and machine learning and may collect third-party data in the background. In addition, the advanced chatbot may also be collecting metadata. Metadata is a set of data that describes and gives information about other data like your phone's model and serial number or your location. Some chatbots will collect this information in the background and then use it to assist in issuing a policy or adjudicating a claim. We'll cover this in more detail in the case study. So now for the case study. I modeled the case study after an actual insurance company, but changed all the demographic and product mix information to mask the actual company. For the case study, our fictional company is a P&C company that was founded in 2017 by 5 technologists. It's licensed in 15 states and offers auto and home insurance. And here are a couple of additional facts about the company. So one of the first things the founders did was to hire an experienced underwriter to help define the specification for the various applications, policy issuance, claim, etc. Since it is a new company, they did not have any legacy applications that needed to be upgraded or replaced, which saved them time and reduced the complexity. They also wanted to target millennials, those 24 and 39-year-olds who are just thinking about insurance but don't know a great deal about it. So that brings us to the issuing of a policy. As you may have guessed, our hypothetical P&C company is using chatbot technology for the policy issuance process. There's no paper applications. When you think about the target audience, millennials, Completing a policy application via chatbot makes perfect sense since millennials use their phones for everything. I should note here that anyone can apply for a policy, regardless of age, and it's not just limited to millennials. For the demo, we're going to walk through the process of applying for a homeowner's policy. And before we do, one thing to notice is the picture of the phone and how clean and uncluttered the screen is. It is simply asking you what product you want. After the person selects the product, the chatbot will start to gather information through a series of chat screens. Again, the screens are uncluttered compared to a paper application. The actual insurance company in the demo is modeled uses text bubbles similar to a messaging app to get the information. Unfortunately, my limited skills in graphics prevented me from adding the bubbles. Anyway, after I entered my name, I am prompted to enter my address. So after entering my address, the system begins collecting information in the background. Some of the data may be this device's metadata we talked about earlier, and some may be information about the property, such as my age of the house, how far the home is from a fire station, and whether or not there is a forest fire burning near the home. If you think about the paper application process, the paper app may have asked you how far your home is from a fire station. And I know there are 2 fire stations near me, but I don't know the exact mileage. I would have to stop filling out the paper app, do a Google search, and then enter the mileage on the paper app. But by doing this in the background for the applicant, the company is enhancing the customer experience, enhancing the accuracy of the data, and it's one less thing for the applicant to complete. Another example of leveraging technology is checking to see if there's a forest fire near the home. The company that this is modeled after uses satellite heat imagery and other data to determine if there's a forest fire near the applicant's home. And if there is, it will block the policy from being issued. The chatbot continues to collect information to assist with the underwriting process. Some of the information is used to determine insurability and determine the rate, and some, like do you have a security system or fire alarm, may be used to determine various discounts. Another data element the chatbot may request is the applicant's Social Security number. Once it has been entered, the system will immediately do a real-time credit check of the application in the background. Once the app has collected all the information, it will provide an instant quote, an instant denial, or refer the applicant to an underwriter for review. At this time, the applicant is also asked to download the completed application for their records, which is required by many insurance departments. An interesting fact before we wrap up this section is that the company may display that little hourglass you see when your computer is processing something, and it may display a pop-up message saying it is analyzing all your information and coming up with your personal quote. Okay, the insurance company that this is modeled after does this to make you think that it is creating a personal quote for you, when in fact it has already processed all the information and determined your eligibility as soon as you entered the last data element. This is actually similar to what a lot of airline reservation aggregators do. They pop up that little hourglass and say they're customizing and pulling all the flight reservations for you, when in fact they already have that information and they're just making you think that they're pulling the information to you personally. So this wraps up the policy issue portion of the demo, and a couple of key takeaways. Chatbots are being used to replace the paper application process with no human intervention, unless it has to be referred to an underwriter for review. In addition to collecting information via chatbot screens, the chatbot is collecting and analyzing additional information in the background. This is the metadata, credit reports, etc. So an advantage of using chatbots is that they are available 24/7, 365 days a year, an applicant can complete an application whenever it is convenient for them. And finally, chatbots are being used as a way to enhance customer experience. So this brings us to polling question number 4. So polling question 4, what is a chatbot? Your chatty coworker? B, a program designed to simulate conversations with humans? C, a new internet messaging app? Or D, all of the above? So we'll give you a couple seconds to complete this, and then we'll move on. So make sure you hit the submit button in the lower right-hand corner of your screen. So it looks like most of you have submitted your answer, so we'll bring up the answer now. And the correct answer is B, a program designed to simulate conversation with human users. So good job. So similar to the policy application process, the claim submittal process starts with a very simple clean screen and then goes through a series of additional screens to collect claim data. So it starts by asking what the claim is for: theft, fire, water, etc. For the case study, we're going to use theft. For a theft claim, the chatbot asks what the item or items were that were stolen. It asks for the cost of the stolen item, do you have the receipts, etc. This information, in part, is being to determine a reserve if the claim cannot be automatically adjudicated. As previously noted, in the background, the chatbot is collecting metadata off the device and that is being used to submit the claim. For example, the type of device, and again, the serial number, and the location of the person submitting the claim. So an interesting fact, the actual company the demo is based on has been able to identify and prevent a number of fraudulent claims by using the background metadata it collected. For example, a few claims were for lost or stolen phones, and the company was able to use the phone's metadata to determine that the phone being used to submit the claim was the phone that was allegedly lost or stolen. They did this by comparing the metadata they collected from the phone the person used to complete the policy application to the metadata of the phone being used to submit the claim. So this type of data would not have been available with paper claims. So once all the information has been collected, and prior to finalizing the claim, the chatbot has the applicant review and acknowledge that the information is correct, and then has them review any applicable fraud reporting regulations. After the applicant has acknowledged the notice, they are presented with a summary screen. And based on the information collected, the claim may be auto-adjudicated, auto-declined, or moved to a queue for manual processing. So this piece completes the case study and brings us to the summary. So, a couple of takeaways. InsurTech leverages technology to allow products to be more competitive. Chatbots collect and analyze information in the background, in addition to collecting the data entered on the screen. The information is collected conversationally and can leverage machine learning, artificial intelligence, and metadata. They are being used to replace paper applications. The goal of using chatbots is that no company employees are involved during the application or claim submittal process. There are still customer service reps if a person does need help. They're available 24/7, 365 days a year. And finally, chatbots are being used to enhance customer experience by streamlining the process and keeping the screen simple. So this completes my section of the presentation and brings us to polling question number 5. Polling question 5. What are regulators' concerns with the use of AI? A, efficiency, big data capabilities, accuracy. B, discrimination, data privacy, consumer protection. C, cost implementation time, staff abundance. C, all of the above. So we'll give you guys a couple minutes to complete your answer, and then we'll review the responses. And again, please be sure to hit the submit button in the bottom right of your screen. Okay, it looks like we're getting there. We're about 30% done. And just about done. So there we are. The correct answer is actually B, discrimination, data privacy, and consumer protection. So this brings us over to the question section, so I'll turn it over to Allison for that section. Allison, it's all yours.
Thank you. We are going to, so if anyone has any questions, they can send their questions to Ernest, Ben, or Tom. Their emails are on screen. So a few reminders before we conclude. Please take a moment to complete the attendee survey by following the link in the resource list to the right of your screen. We will respond to all questions via email following today's event. We appreciate you joining us, and thank you for participating in today's program.